Hello, welcome to JSServices Tweet Tutorial, the goal of which is to provide you with a better understanding of how to interpret the analytics, as well as to show the tools used to make the assessment and how you can demo them to make them part of your trade plan. More than anything else, the analytics that I'm going to show you are an awareness tool that provides clarity to what the current conditions are, so trading methods can be optimized and tactics aligned with these facts. In the tweet examples, we are typically highlighting the market of interest. If it's a futures contract, we'll put the futures symbol as well as the contract month that we're talking about. We'll typically have a highlight comment, searching for resistance. These highlight comments are pretty clear and direct. We do try to add some color. We will identify specific price points and we'll refer to them by a qualifier, in this instance an R level, which is represented on the graphic image. And then we'll give further insight to this highlight comment. So searching for resistance, 1878.25, R level, anticipate an exhaustive signal. So we're anticipating an exhaustive signal, and that's represented by this red dot. Structure break is tell. So we're looking for a confirmation of this exhaustive signal, and a break in structure is the tell that we're right. The application that we used to derive this signal was our JS desktop. Every market image we offer has a title which defines the market state. Markets are fundamentally driven and interconnected. Price movement within the fundamental foundation creates a technical market state, and each market state has its own characteristics and attributes that define it. In this example, the market state is a bear trend, which is defined by a market that's making lower move lows and lower move highs. The attributes of this state is that there's good momentum, has a negative bias, it's a trend negative type market, and we can expect volatility to increase. If trading is a chess game and all your tactics and indicators and signals and methods are the pieces that you play the game with, the market state is the board. It's the foundation that the game is played on. As fundamentals change and shifts in market state occur, these shifts originate at market structure, which are the price levels that define the state alignment. So this market is a bear trend making lower move lows, lower move highs, and as long as that statement is true, the bear trend is in force, and we can define that with specific price points that define these peaks of the lower highs. If this structure is broken, then the statement of a bear trend is not true anymore, and the market is in transition to a different market state. If the structure is holding, then we should anticipate the attributes of this market state to hold true and the market to perform to expectation. It doesn't mean that if we're in a bear trend that the market can't have corrective rallies. It's just those are rallies in a bear trend, and we should always anticipate that that trend at any time can resume. The R level is a unique part of this structure as it represents the sentiment bias for the trading session. It's a classic over-under number. Buying breaks above this level, selling rallies below it. It defines the session sentiment bias. In this example, the sentiment bias is above the market and defines the upper peak of the bear trend. And it represents the optimal sell opportunity for this market state and structure. The other market structure points are what we call our critical range, with our upside pivot and downside pivot. The downside pivot defines the lower trough, the support level that the bear trend must take out to confirm a new leg lower. The upside pivot in this example would represent a lower peak. If the market was going to be more aggressive on the downside, it would be expected to top out at the upside pivot. In this example, there's an understanding that sentiment is above the market, so it can go as high as sentiment. But if we get a failure back down through, that would be a structure break to the downside and a tell that the bear trend is ready to resume. Part of the JS desktop is a playbook that identifies the strategy themes that should be anticipated for a market's current state and structure. This structure can be displayed on a chart. So you can see the R level, upside pivot. This is our directional, coincides with the images. And when we view price action within market structure, we get clarity We're able to anticipate opportunity. So overnight in the S&P, we had what we call a buy DIR breakout, where the market rallied above the directional and broke out, triggering what we call a hedge strategy theme, which targets the R level. So at the moment of the tweet, the market was in a hedge theme, making a play for the R level. So one of the reasons we were concerned about having a break in structure is because we had a positive price action into our sell opportunity. So we wanted to make sure that we mentioned that the confirmation tell is a structure break. One thing that's unique about these market structure points is there's a variance that surrounds them. And we use those variances to confirm a breakout. This is where your signal acceptance should be within these zones. And it gives us better clarity. Is the market holding structure or breaking structure? So this is the market state awareness we had at the time of the tweet. We know that it's in a bear trend, and we know we want to fade momentum against the R level. So the market's searching for resistance, and we know that 1878.25 is the R level. We want to anticipate an exhaustive signal there, but a structure break is the tell, that it's going to confirm that this positive price action is done. We're always looking to offer opportunities that have big potential. You never know how the market's going to play out, but if we can identify the areas where the best risk reward is, that's what we want to provide, the biggest opportunity. And sometimes that opportunity will happen in a session, and sometimes it'll happen over multiple sessions. As we can see, this is the top of the bear trend. So as we take a look at this example and how things played out, the market did break structure here. They gave us that tell. And a lot of times the market will break structure before they give you the opportunity. So this is actually a classic setup where they break structure first, and then they give you a squeeze into the level. They come down and they price qualify again. This is a negative signal. Again, setting up another squeeze. They don't take out the metric to the upside, and they start to build negative structure like a bear trend should. These themes can last through multiple sessions. So if we take a look at the following session after this tweet, here's the end of the session, and we see the bear trend following through. So it ultimately comes down through the downside pivot. These are the next. This is the structure for the next session, but you can see the negative follow through of this opportunity. Anytime the market offers an opportunity at its sentiment bias, it has the potential for a substantial move. Breaking from the 1878.25 level down to 1802.25. And here's the full action for the next session. And it's another day, and the bear trend still in force. Thank you for your interest in JS Services. I encourage you to visit our website at JSServices.trade and sign up for a demo of our application, and reach out to us at info@JSServices.com with any feedback, comments, or questions. Look forward to working with you. Good trading.